Welcome to Trading Lounge and the SP 500 for the 24th of April. I'd like to start with Amazon and then go to the Nasdaq and then go to the S&P today. So with Amazon here, it's been one of these stocks that have been leading to the upside, and we can quite clearly see that the trend to the upside is not completed, and I mean that because of this powerful wave 3 here that's not even completed as well. So we'd still have wave 4 and wave 5 to go, so it's a bit difficult to see the Nasdaq drop lower from where it is when this is still needs to play out here. So in this case here, we've got wave 1 here and wave 2 here, and we're looking for 5 waves in the third wave here, and in this case 1 and 2 and 3 and 4 and 5 here. And we have been honing in on this little pattern within here, so I'll just go into the tick chart so we can clearly see that, and we've just been looking at it here as an A and a B and a C wave here, and then looking for the move to the upside. We know that, I know that, we all should know that wave 4s can get rather complicated, but this is a reasonably nice size for what's occurring at the moment. But it could get a little bit uglier, but as soon as it takes out these previous highs here, then this looks corrective as well. So once it takes out those highs here, then we'll be on the right track here anyway. But this is definitely a corrective pattern, whichever way you look at it, and we should be making new highs. And of course the 2500 here is a medium level, and it will see a larger correction play out across this, above it and below it, and currently it's sitting on the top of minor group 1, so 1, 2 and 3, or 100, 200 and 300. This is minor group, top of minor group 1. It's got tested support, so we'll see it up at the next level. So the Fibonacci numbers is 1, 2, 3 and 5. So that said, we can have a look at the Nasdaq here, and the Nasdaq here, we could count this up here from the low here as 1 and 2 here, and wave 3 here. And remember too that, I mean, it's not a big deal, but the 61.8% here that we were looking for on the S&P and so on, just above the 2900, we've already passed it here, and we've moved up higher here. Not that that's a big deal. It's fine for the market to go up to the next fib level, or to the next or markets like to reach the closest largest number all the time. Not a big deal, but it's just a small thing. And there's a nice range in this wave 3 here. The S&P is a little bit lazy because it's been dragged down by the banks and other sectors, I'd imagine. However, this wave 4 here has also pulled back. Well, let's go in and have a look at this. Look, if this is correct, I'll just move this out of the way here, and let's just copy this one here for a moment. So what we'd be looking for here in a nutshell is we'd be looking, if it's a bullish pattern that we're looking for, we would see this pattern here across the level here, across the 9,000 here. So we've got the arrival, we've got the reaction, which is we're looking at as wave 4, and we're looking for wave 5 to go up, and then we'll see an ABC pattern here, and then we'll go further up. So we're going to see a dance across this 9,000 level here, which will be the arrival, the reaction, if this is going to play out here. Well, of course we'll look at the short trade too, but wave 5 coming into play here and coming up to somewhere up there, and then we'll see an A wave, a B wave and a C wave play across here, and then we'll see further up here. If we get 5 waves here, right, we've only got these 3 so far, but if we get 5 here, then we're going to get another 5 over here. So we could look at this then as, copy this as wave 1 here, and wave 2 back in this space here. So before we can confirm this situation here, and this is the one to jump on, this wave 3 will be the strongest, but before we can confirm that, we do need to see 5 waves up here. This market can still fail at here as an A and a B and a C wave to this high here, and just drop straight down through here. So don't get too excited, and we need a plan for that as well. I mean, You know, we're not economists. We're, you know, short-term forecasters, but we just use the forecasting to get trade setups. Once we know that we're in a particular direction, well, then it makes life a little easier. Let's go in and check this out. So here so far, we're looking at wave A, B, or C here, finished here. And then the next situation here is 1 and 2 and 3 here, and wave 4 here. So wave 4, as you know, pulls back to the 38.2% retracement level, so roughly in there and roughly up there. That brings us right in on that 38.2% retracement level. Not that that means everything. It could still be wave 1 coming down here, so, but it's a starting point. And the little move that we have up here appears to be 5 waves up here. So we really, you know, at this stage, we wouldn't really want to short this market unless we had this low taken out here. That would be the catalyst here for a trigger downwards at this point coming through here. So we could use that as a trigger. Of course, we could get closer to that as well, and we'll have a bit of a look at that. But as it stands now, we're looking at this here as wave 1 here, and wave 2 pulling back to the 50-60% retracement level, and then wave 3 up here. Yeah, and as I mentioned, it's possible to have all of this down here as wave 1, and this is wave 2 here, and coming down for wave 3. So, you know, we've always been in a situation, once this had finished here, that we're in a rock and a hard place, and the first move down really wasn't going to solve any problems, and this move here is not going to solve any problems. But what has come out of this now is that we can go long above this high here, and we can go short below this one here. This market here appears to be in 3 waves to the downside here. I can pull 5 waves out of it, so that's a little annoying. But this one here seems to be 5 waves moving up here, so that's kind of given us a bit of a bullish edge on this, so we can look at it like this here. But we still need a setup, and we still need confirmation on that. So moving in further through all of this, it looks a little bit like this here, with wave 4 coming into this space, wave 1 here, wave 2 here, and going up for wave 3 here. So we'll be seeing 5 waves to the upside here, if that's going to be the case. So let me just grab these here. So copy this 4 and 5 here, which would make borrow one of these for wave 5 here, and this in the classic trading levels pattern across this level here, this would be the arrival, the reaction, and then 5 waves up to finish the top here, and then a larger ABC pattern here. So we're going to be dancing across this number here for a little while. The best trade that's going to happen in this space here for a while is from wave 2 to wave 3 here. So as I mentioned, taking out this top here would be the way to go on this one here. So we'll just put that in here. We don't need to put it at the top there. We can come down here further on this here. This 8,800 here is also going to see, when this moves up here again, we're going to see some sort of situation like this here. So just be mindful, we need to get through that again over here. Once that is there, then you can go along there again. Can you buy down in this space here? Probably, but I wouldn't overdo it. Next level down, 15. So we could grab this one here, copy that, and work down to the closest largest number here, which will be, if this is the 61.8%, we would need to see this here as the market would come down and bounce off number 5 being the second strongest number, and there would be some sort of corrective rally here for that, and then the market would come down and bounce and eventually get through here. Then that's the short trade from that point coming down from there. It needs to allow that just to drop, then look for the retest here. That retest should be on lower volume than the move down here. That helps you confirm that this is a corrective move, because corrective moves are on less volume. So as it stands at the moment, this is reasonable. I haven't counted this, I mean, I haven't labeled this to the upside here, but this would be 1 and 2 in here, and then wave 4 would go in here, wave 2 over here, sorry, wave here, 1, 2, 3, 4, 5, A, B, C, 1, 2, 3, 4, 5, so that would be like that here. And would be looking down here as an ABC here, so I think we could just go in and check this out here. So let me just I haven't updated this, of course, as you can see, but let's just this would be 1 and 2 and 3 here. Would have to use this ABC as a fourth wave here, slight overlap there, but we'll work with that. 1, 2, 3, 4, 5 here. So this would all be wave A here. This would be wave B pulling back up 50%, and then this would be wave C coming down here. Wave C would be in 5 waves, and so far you can see 1 and 2 and 3 here. So I won't bother pulling that apart, but 4 and 5. So we'll see another little move down through here. So you could probably buy down here at 8550 here somewhere, but we're moving into our 61.8% retracement level at that particular point in time there. Anyway, I won't go into all of that. I want to go into the S&P now. So with the S&P as well, the thing that's different here is that the S&P is not as strong as the Nasdaq. So the Nasdaq, what happens with leading stocks is they tend to have much more range in them. So they're much more profitable because their trends are longer. In following stocks, they're safer, but they don't range as much, and we can see that because it never hit its number up here, the 3,000, where the Nasdaq hit the 9,000, and also too the range in this little leg here is shorter. This is really the same distance, so wave A and wave C here have the same distance. So in Elliott Wave, if 1 and 3 are the same, then we could probably expect an extension in wave 5. This is typical of a correction, though, of an A wave and a C wave here having equality in here. So we're not out of the woods yet within this situation. You know, I said it would take a while to work out, not just once this 5 waves here and wave C are finished, that would be the end of it. No, we still need to work through the rest of it in here, and this is the tricky part here. So we know that that from this low here to the top here of wave C here, we know that the market's pulled down the 38.2%, so we can grab this wave 4 and pop it there. It's rather small compared to wave 2 here, so that's a problem. That raises a flag. The other move here from this low here, to this high here, the 61.8% here, the market could even drop down to that point there as well, as somebody mentioned, and I think that I've already had this before because that's already sitting there, but having this up for 1 and back for 2 here, then up for 1 here and back for 2 here, I don't think it's the case. But yeah, I mean, technically we would have to come down below that here to call this in as an ABC here. Technically it need to take out this low here. That's what it need to do to confirm that as an ABC, but as traders we can't wait that long, so we need to take action before that. So in today's thing we'll be looking at pretty much going long and going short really. So let's just move into all of this. So on the 4-hour chart here, we've got this up here as 1 and 2 and 3. So we can look at this here being wave 1 here and wave 2 pulling back into here. But at the same time, I just want us to be aware that the move down through here, even though I count it as a corrective move, it could end up having wave 1 here and wave 2 here, pulling back into that 50-60% retracement level. So we need to prepare to go short as well. Like I mentioned before, we were going short in through here and down in through here with this, and we did all the right things. But then I could count it as corrective, and then we could also see that, well, we knew this was going to pull back up 50-60% in whatever case, but we could see that this is in 3 waves down here, and this is quite a nice 5-wave structure moving up through here. So anyway, let's go in and have a little look at this. Where are we on the 1 hour now? So the market's pulled back up. I can count 3 waves down here. I know this one here, this little spikes could be a little bit lower than this one here, but on the cash market it's not the case. So I've used that as wave 1 here and wave 2 here, and then 5 waves up here for wave 3, ABC for wave 4 here, and then up for wave 5. So I think it's quite a nice fit. But if that is the low here for whatever reasons, it's not on the cash market, well then that makes that the A wave, the B wave over here, and the C wave here. So that's a bit of a inverse pattern of this one here. So, but look, I think that we don't have to. I mean, if you're short now, then that's fine, you know. Then, but otherwise, we'd need to be below the 61.8% here, which in this case is in group 2 here. So we know that group 2 here, if we take this is all of group 1 here. So we know if we find support on top of group 1 there, not just trading above it, but a classic trading levels pattern and sitting on there, if that's the case, then we'd go straight up from that. We always look at that number 3 for that, very closely at that. And then down below that, we have the 2800 minor level 8. So we have subgroup 2 below that. So this is the range that the correction would normally sit in here. And in this case, we're lucky because the 61.8% is in this space here as well. So we could say, if instead of taking this low out here to short, we could say that if group 2 here becomes the retested resistance, then we need to be, there'll be some sort of thing in here. But if that becomes the resistance like that, then we need to be short from that point. We need to be short here, and then you can also do the same thing under here as well. So under the 50 here, the midpoint, the 5. So if this becomes the retested resistance here again as well, we need to be short under there. And then we also need to be short under the 720 area here as well. That's where you build in the short trade here. And it will be a little bit rough, so don't over trade it, don't overthink it. Less is more. This can move down to here for this. And we're expecting this to move from here down into here and then make a move up here. Now, what we're looking for here is a classic trading levels pattern here as well. So there'll be some sort of dance across here. Once you've got that dance there, then you can also bring this, copy this, bring this down to the little second high within here, and then move up from that point there. So that's what we'll be looking at. So this takes care of the short side, at least we know where we are, and this takes care of the long side. We also want to be building in further trades up here as well. When you see the number 3 here, the 30, the 2830 as support, then you want to be building in on that, and you also want to be building in on the 50 here, and then just leave it here, because what's going to happen here, I'll just remove this here, at the 29, at the old high here, there's going to be struggles at this point. So we're going to see the market have some larger swings at this point, you know, so you really want to, you know, be able to cope with that and not really get involved in it. You just really want to observe the market swinging here until you get to a point where you can see that it's had its last retest here, and then you know that you can take the next higher and add to that position, and then you'll be going up to the 3,000 at that point. But I'll be obviously another video out before that. But it's, don't panic into this old high here, and don't overtrade in here. You need to handle these swings. If you're going to make the money, you need to get up to the 3,000 here at least. 15-minute chart here, I don't think it tells much more of a story here. Same thing, so I'll just go to the tick chart here. Okay, so the tick chart here, from the top here, we've got 1, 2, 3, 4, and 5 here for the A wave. And sure, that could be wave 1 as well. Wave 2 here being simple and sharp, a B wave, and 1 and 2 here and 3 here. I have to pull this apart here. Wave 2 is complicated because there's so many bars in it here compared to this wave 1 here. So wave 4 can be afforded to be simple in this case. I just don't know if that's, I just need to, this is 100 ticks, I need to pull it apart on 50 ticks to get that. But I still know that we need to be down here at this number. This is group 2 here, and 72 is important, but when you get 2772 or 272 together, for some reason it just becomes much stronger, and I've been aware of that all the way through this scenario. I used to mention it a lot, but I haven't really mentioned it here at all. So it becomes a much stronger point of contact here, and it's what we're really looking for as support. So if that 272 becomes the resistance, then I would be using that to be on the short side for that. Alrighty, that's that. Enjoy the weekend, and thanks for tuning in, and thank you for the support. Really appreciate it. Cheers.